Welcome back, traders, to my market outlook on index futures for the week of March 9th. It is going to be daylight savings on Sunday night, so the market could act a little weird, but it should sync up back to normal after a day or so. But other than that, on the economic calendar, I'm not going to show it on screen, but on the economic calendar, the big event this week is CPI Wednesday morning. And I always advise just stay out of the market before the news hits, because CPI pretty much is going to be a 50-50 gamble. Who knows if the market's going to go up 200 points or down 200 points. So it's better just to stay safe and stay out of the market before the news. But let's go ahead and get started with S&P on the monthly chart. And I'm going to just stick with the monthly and the weekly this time. I just want to give you a big picture view. So on the monthly chart, this most recent candle is March's candle, so it's not done forming just yet, but we have buy side above these highs, and I'm counting sell side below these lows right here that are relatively equal. Previously, I marked this out right here as the change in the state delivery on a monthly basis. We came close to it, but this time in March, we did finally get a change in the state delivery below us. So I think we are going to be going down bearish. However, as you'll soon see, I think these highs up here, they're kind of smooth. These 3 months, the highs are kind of close together. So we are going to go down for a long-term bearish trend. We do have some unfinished business here that I do think smart money will want to take the buy side liquidity before going into a serious bear market. But I think before we get there, we got to hit some kind of a support level. And the support level I marked out here are both of these wicks. I marked out 50%. This teal one right here is a monthly lower wick, and so is this right here, 50% of this monthly lower wick back in September. Now I have this marked in purple for a reason, but I'll get to it once we get down to a weekly chart. But I'm looking for both of these to be support here. I think it's pretty likely that we can go into this purple line right here. Now looking left, there are some small volume imbalances, but I'm not really looking at that. What I really want to draw your attention to is this fair value gap right here. I think this fair value gap could get retraded to, and this is also, if you know, pretty much in the middle of both of those wicks. Now you could just draw it like this, but because of this volume balance up here, I'm actually going to go ahead and pull this up to include that volume imbalance. And as you can see, we have this pretty large monthly fair value gap. I think if we come down, I think this purple line could get traded to, very likely, but I would like to see price stay in the upper half of this fair value gap. If we just stay in the upper half of this fair value gap and we start going away from it, I think that could be signaling us for a rally above for these relative highs. I'm going to go ahead and take this off just to clean up the chart, but I want to draw one more thing before we move on to the weekly. I'm going to draw a line from the high here down to, well, I'm going to go this low first. And I'm really just grading the dealing range on a monthly basis. You can see that we did drop down pretty low. And it's kind of funny that it stopped pretty much right at 50% of this dealing range. But my point is that we've come down and we've gone slightly into a discount, and the market has moved away from it. So far, now remember, this monthly candle is not done forming, but so far it's telling me that we don't really want to be going into a discount. As soon as we go into a discount, it's kind of reacting like it wants to get away from it. Now, I do think it's going to come down into this fair value gap, but I do not want to see it go much lower if we're going to go back for these highs. If we start going below this fair value gap, taking this low out, we could be going down for this monthly sell side liquidity instead before going up for the buy side. Now, taking a closer look at the weekly, we got the monthly sell side down here, but I'm not really wanting to pay attention to it just yet. We got this monthly lower wick that was in teal. And then here we do have a swing low. This is a weekly sell side liquidity. Now, I don't really want to see this get taken before we take buy side here. You can see how we have these relative highs and it looks pretty smooth up here. There's going to be a ton of buy side liquidity up here. If we are going to go for a long-term serious bear market, I would definitely think that smart money will want to take this buy side liquidity before tanking the market. So because it hasn't done that just yet, I don't think we're going to be going into a really big bear market just yet. But in the short term, I think we're not done going down. I think price is going to come down into 50% of that monthly wick, and as you can see, it's going to be 50% of the body on this weekly down candle. So that's why I marked this in purple to remind myself that this is also going to be the mean threshold on this order block on a weekly basis. So on the weekly chart, I think where we're going to come back up for the buy side, I don't really want to see price close below this mean threshold on a weekly candle. We could wick through it, that's perfectly fine, but I want to see it close above the purple line. It could close in the blue fair value gap, that's perfectly fine, but I want to see only a wick through the purple line on a weekly basis. And if we do create a fair value gap, I want to treat it as an inversion fair value gap, but nothing so far just yet. We do have this old BISI. I'm going to keep this here. What I'm thinking is for the market to come back down into where I think support would be. So, you know, maybe this purple line right here, or even like just half of that fair value gap. We'll just count that. Then I want to see the market come back up above this old fair value gap and then use it as a reclaimed fair value gap, pushing the price higher. Well, it could go through this, or it could just stop right here, but definitely want to see price come for the highs up here. So this is kind of what I'm thinking about. I'm not going to go into the daily chart. I think on a weekly basis, it's pretty clear on what my idea is. And if you look at the last couple of weeks, we do have a pretty balanced price range. So I think it's going to have a strong move to get through all this balanced price range right here. So even if we go down to a daily, I don't think we're going to see much inefficiency here. Definitely on the upside, I want to keep an eye on this weekly CPI. If we do go through it, I want to see it used as an inversion fair value gap to bounce us up for the highs. But right now, you want to definitely keep your eye on the monthly wicks. The purple monthly wick, 50%, and 50% of that other wick that is in teal. Now, moving on to Nasdaq on the monthly chart, we got buy side up here. It's not as flat as S&P, but we do still have relative highs. The sell side is going to be down here with these relative lows. And if I take a gradient from the high to the low, we can see the same thing as an S&P so far. Now, this candle is not done forming. This is March's candle, but we did go down into a discount, and then currently it is up in a premium. So it's showing me that currently doesn't really want to go down into a discount. Okay, and also here we have a monthly change in the state delivery. Price went down the opening price of this up candle, so we do have a bearish shift here. Of course, this candle hasn't done forming yet, so if it closes below here, that's going to be more of a bearish signal. I kind of feel like it's just going to wick through it, and then in the second half of the month, it's going to go back up here. But first, I want to draw your attention down to these wicks once again. We have a pretty long wick right here on the monthly. It did trade through at one time, so that's why I have this dashed line. If you guys are a little confused on my lines, a solid line is when it hasn't been traded to yet, but if it did hit it a one time on the first time, I'll change it to a dashed line. And then here you can see I have a monthly order block. Oh, sorry, a monthly rejection block right here. It traded down to it once and the second time. So if price trade to a line multiple times, I'll have a dotted line. But anyways, let's focus down on these wicks. So we have this lower wick right here, again in purple, 50% of that, the monthly lower wick. This one's already been traded through. I think price can come down in between these wicks. And if you look left, there is a small monthly volume imbalance, and that's going to be in the upper half of both of these wicks. So like me, if you view these as the high and low of a TD array, so like for example, highlighting this right here, is that volume balance is going to be in the upper half of this range. So I think price can come down. I think ideally it's going to tap into this volume balance and then reject and go away. But let's go ahead and get down into the weekly chart. So here on the weekly chart, just like S&P, this purple line right here, the monthly 50% of the lower wick, is also going to be 50% of this down candle. So I'm also viewing this as the mean threshold of this weekly order block. So just like S&P, I want to keep my eye on the 50% of these lower monthly wicks, this range right here. If we do start getting a bounce, how high can we go? Well, I mean, There is this weekly CPI right here. I want to see whether or not we can trade through it, or if we're just going to get some resistance here. If we do start getting resistance and displacement, I guess we could start coming back down and we can aim for this sell side or even the monthly sell side. But ideally, what I want to see is price trade through this weekly CPI, use it as in the inversion, and then go for the buy side liquidity. But first and foremost, got to keep your eyes on both of these wicks and this range right here. So that's going to do it for me this time. You guys should have a pretty good idea of what I'm thinking on the higher time frame. If you've taken away any insight, please give this video a like and subscribe. Make sure to be safe Wednesday morning. Watch out for CPI, and until I see you next time, safe trading.